There's no doubt that a systematic failure of Evergrande would have repercussions, and we think that's something the government will want to avoid. But saying that, we don't actually think they're going to step in directly, at least, to avoid a default. I mean, they are concerned about leverage and the concept of moral hazard. That said, they probably work behind the scenes in making sure that sort of banks, there's some restructuring of debt. So they will be trying to avoid any significant spillovers that such a default would occur with the Evergrande.
But if they don't step in directly, as you're predicting, Sian, what kind of, if we can quantify it, what kind of impact could it have on growth numbers in China over the next 6 months?
Well, it largely depends on what this will mean for the real estate sector and actually how that flows over. We do know that the real estate sector is extremely important, but also they do actually want to try and avoid speculation. So I think it's putting it into perspective. I mean, we are in a period where we have already seen that they do allow defaults. It hasn't completely decimated the economy. I think the sort of the bigger risks that we're seeing, at least at the near term, is how this zero tolerance towards COVID continues to play out, and also how these tighter restrictions are actually going to weigh on, not just in terms of Evergrande, but also in terms of other real estate and, of course, online education and like. So we do expect some short-term hits regardless. But longer-term growth should actually, it's putting more quality and ensuring sort of the longevity and sustainability of economic growth in sectors.
That being said, Sian, then what is your outlook for growth momentum in China's economy from Q3 over into Q4 and next year?
Yeah, well, it's very true that we've been seeing a very sort of weak soft patch. The August data did confirm this, partly because we saw those restrictions. We had some outbreaks, which weighed particularly on household consumption, which has been, the recovery has been quite disappointing. But also these tighter restrictions are having some short-term pain for investment, notably in terms of the real estate sector again. But going forward, we do expect that to sort of pick up. We're expecting some easing in restrictions to improve the household spending, so a little bit of a recovery there. And also it's important to note that at the moment, the local government bond issuance, so the quotas that they've spent is significantly below. It's less than, it's about 40%. So we're also expecting that we should actually see some further infrastructure investment, which should actually provide some support for the economy. So we're looking at 8.4% for this year, then slowing to 5.8% in 2022.